Hello, Hive. Do you know what the markets are doing today? Well, for those of us who are in the industry, of course we do. We have to. But some of you, the market's ups and downs might stress you out. So I have a couple tips for you today. Number one, you should take advantage of something called dollar cost averaging. And what that means is set a day, whether weekly or monthly, to invest the same amount of money into the markets. Sometimes your price might be a little high and sometimes your price might be a little low. But over the course of that year, you will end up with an average price and you don't have to worry so much about the daily ups and downs. Second of all, make sure you have an investment plan that is really personalized to you. Sit down and think about your time horizon, your goals, and most importantly, your risk tolerance. And also make sure that this is long-term money that you're investing and not money that should be set aside in your emergency fund, which is usually 6 months of expenses. Third, make sure you invest in a low-cost way. And I would suggest that you use either index funds, exchange traded funds, or ETFs. And for those of you who want more of a set it and forget it approach, you can use one of the many low-cost robo-advisors. What all of them are trying to achieve is to create a diversified portfolio for you, aligned to your time horizon and risk tolerance, but trying with the goal of making market returns. And the reason why that's important is that most actively managed funds don't beat their market indices. So why try anyway? And finally, for those of you again who are stressed out by the markets, check your plan quarterly, not daily, not morning and afternoon, not by watching television, but sit down once a quarter and review your plan and make sure it's all aligned. And that way you will be well on the path to meeting your goals without all the daily stress.